What is going on, traders? Another week has come to an end, and this week I again want to do a little backtest on how the continuation model has performed on the 1 minute chart. We are going to be backtesting Euro US dollar. We are going to be covering the New York session only, and the goal is to reach 10% account balance gain as soon as possible. As for our rules, we will only be taking continuation model trades. And let me quickly explain the continuation model to you. There will be a detailed video in the description. Let's show an example of a bullish continuation model. We will have a visible uptrend. We will then sweep liquidity and have a market structure shift with strong displacement to the upside again. After that, we are going to map out where our breaker block is. In this case, this is going to be our breaker block, and we are going to use the FIB tool to establish a premium and discount zone. Let me quickly change the layout of the FIB tool here. There we go. So the green is going to be premium and the red is going to be discount. In a bullish model, we will only be taking entries in the discounted zone. In this case, we could take a trade off of the breaker block. So what we would then do is go set a limit order there, and we will be covering the low of the candle before the last candle that formed an imbalance or FEG. And then we are going to be targeting a logical level for around 2R. And we're going to try and target the most low hanging fruit. So that is basically it for this model. Let's actually get right into trading. All right, so as you can see, we just arrived on Monday. It is Monday, the 14th of August. Let's see if we can catch any trades here. All right, so as we can see right now, to me, the model has formed. If we take a closer look at the previous price action, we can see that we were trending down the whole time, but we respected all of the previous highs. But now what do we see? We basically violate this previous high right here, but still continue shifting lower. So to me, this is a sweep of liquidity followed by a market structure shift. So right now we will see how long the displacement lag is going to be. And as soon as we find that out, we can use the FIB tool to actually pull our premium and discount levels. It seems like price is already pulling back. So what we will do is we'll use our tool. And in this case, we want to be catching entries from our premium level. And if we take a look here, we have multiple FEGs that we can target. So first we have an unmitigated fair value gap right here. And we have another one in a premium right over here. As for our breaker block, that's going to be this one right here. This is in a discounted zone, so it's not going to be interesting for us to actually take trades from. So our order is going to be set right here on the open of the FEG. I will be covering the candle just before that. So this is going to be candle number 1. The candle that actually has the FEG within it is going to be candle number 2. And then the candle after that is going to be candle number 3. Now you could go for a stop loss above the high that swept liquidity. In this case, I really don't want to see price push any higher, especially not to this FEG right here. For the sake of the strategy, I always say cover the high of the candle with the previous FEG. So for consistency's sake, let's actually do that. I will cover this high. Normally in my trading, I would only cover this high right here. If it violates that, I do think that we are going to continue higher. But anyway, let's just try and do this. And since we do not see any structure to the left-hand side, I will be going for a hard to risk to reward ratio. Now, of course, you can go to the higher time frame and map out certain levels there. That is something that I teach people in the elite membership as well. I am not going to reveal too many extra confluences because the model in and of itself is so strong already. So what I'm going to do is I'm going to put on a trade for 1% risk and see if we actually get filled. Now we get filled right away on the next candle and have a really nice reaction. And as we can see, we get filled for a nice 1 to 2R trade, and we are already up 2% on the account overall. Let's see if we can catch another trade here today. As you can see, it is now 11 a.m. and there are no real entries provided for us anymore. Here we just had a sharp continuation. Here the market started to reverse, but there were no sweeps of liquidity that I would consider taking a continuation trade off of. So what I'll do is I'll move to the next day. I'll move to Tuesday. All right, so we just reached New York Open. Let's see what this day has to offer. All right, so right here, I do see that there is a possible continuation model forming. It is not a picture perfect one, but to me, it is still a pretty valid bit of a potential setup. So first things first, let me quickly cover what was going on here. As we can see, the market was trending overall pretty bearish, but we always respected the previous highs. So these are the previous highs right here, and none of them actually got violated. Now here we had a really strong push to the downside, and the market quickly started to recover. Now, if the market wanted to reverse, it would have done so either by refilling this imbalance that we have over here, or what it would have done is really cleanly swept liquidity from this high or this high and then showed a really strong reversal. And then we would have seen that the market started to sell off really aggressively until we saw that the market mitigated some kind of a fair value gap or some bit of liquidity. But in this case, liquidity was left intact. The imbalances weren't filled. So that to me indicates that the market might actually want to continue up higher. And that is what we are going to play off of on this specific trade if our model do sets up. So what we see now is we are really bullish, and we just took out this low that we created right here, which pulled back, mitigated the imbalance, and is now starting to show signs of a market structure shift. So now I am waiting for that market structure shift right here. Let's see if we actually do get it. And right now I would say that this is going to be a valid market structure shift. Over here I was not convinced because the candle never actually closed above that. If a candle closes like this, to me, this has signs of a sweep of liquidity. So if it would have done that, I would have not considered it a market structure shift at all. Now it's just a matter of waiting for our bit of displacement to form and then for us to use the FIB tool to catch a potential entry. So right now, this is going to be our premium and discounted zone. And let's see if we can actually catch a trade right here. For now, this to me would be a valid breaker block. And we could also consider this one as the breaker block, which is up a little bit higher. We would need more displacement for it to count as a valid level. For now, I will be setting a long entry on the fair value gap that we have right here. And I will be covering the low, targeting a solid 2R, which is going to be these highs right here. So that is going to be the trade. And it seems like the market starts displacing up even higher. So at this point, our premium and discount zone obviously changes up. What we could do now is take an entry off of these fair value gaps. And in confluence to that, we also have the breaker block right here. So this is our breaker block. We have a fair value gap right here. I'm going to use these full candles because it doesn't have any wicks, or they don't have any wicks. That's where I'm going to set my order long. As for my stop loss, I'm going to cover the last bit of imbalance right here. And my target is going to be this high right here for now. And if we do displace higher, then I might use that for a target. So let's see what happens here. Let's place the trade for 1%. It seems like we just missed out here. If we do re-break that high, then I'm no longer interested in a position. Also, if we get filled now, I might have to rethink our target here. I would like to target this low hanging fruit, but that's only 1.6 R. So I'm going to go for a solid 2R risk to reward. And let's see if we do get filled and not get stopped out, of course. What I'm also going to do is I'm going to use this level to close 75% of my position because that is the low hanging fruit. So that seems to have been hit right now. So let's close 75% and I'm going to move my stop loss around break even and cover potential commissions. Let's see. Seem to be re-breaking the lows. And yes, at this point, this doesn't look like a sweep of liquidity to me. We are getting later in the day. So if we would have went up again after taking out this low, had a nice reaction to that, then I would have considered staying into the trade. But for now, it is clearly showing that it wants to go for some sell side liquidity or rebalancement. And if we take a look, we have some imbalance right here. So we have a fair value gap right here on the down end, which is below our stop loss. Other than that, there is no real imbalance and I do not see a strong level of liquidity except for this one. These were left intact, right? These lows right here. This one was already taken. So if the market is going to drive lower, it is likely going to either drive to this FEG or to this liquidity right here. So what I'm going to do now is I'm going to close my full position here, if the market allows me to, or I'll just set my stop loss here and boom. Okay, we get taken out. So that was our second trade. For now, we are up 3.369%. All right, so we have arrived on the session of New York on Wednesday. What I'm seeing right now is a pretty cool potential setup. So we just took out this high right here. And not only that, we have an additional confluence. We also mitigated this fair value gap right here completely. So here the market basically did both of the things that we expected to do. It mitigated the fair value gap or the imbalance and rebalanced that and also swept liquidity. So that's a really strong sign that the market will likely continue on lower. Now here we weren't trading yet, so we missed that entry, but here we also had a really clean sweep of liquidity followed by a fair value gap, which would also have provided a really clean continuation trade. Now let's see if we do get the market structure shift, because that is something that I really need to see before I consider taking an entry. So that would be right here. See if the market gives us that. It actually does. And now we can start looking for potential targets to take an entry off of. So perfectly around equilibrium, what do we see? We see this really small fair value gap, but it is still a valid fair value gap. So I will be placing a short order there, and I will be covering the high of the candle, that candle number 1 previous to it. As for targets, let's actually zoom out and look for the low hanging fruit here, which is going to be this low for around 6R, but I'm pretty sure that I will be taking partials at some point. So let's smack on this trade and see what happens. If we even get filled at all. Seems like we might not get filled, and the market is going to move with, oh, there we go. Wow, I did not expect a move like that. Goddamn, that's really clean. So that was close to 6R actually. That's really decent. And that puts us up for 9.2% on the account. That's really nice. Let's see if we can actually catch another trade on this Wednesday. Simply looking at the price action right now, I'm actually seeing a pretty cool potential setup. So we actually have another continuation model happening right here, right? So if we take a look to this high basically rebalanced the imbalance. And we also swept liquidity right here and had a really clean market structure shift once again. Now the market did move quite low. So what I would do is look for probably a really premium entry and a really tight stop loss. Perhaps I might look at half risk, because it is going to be a pretty risky trade. So let's actually take a little peek what we can do here. We have multiple FEGs. We have this one, which is a strong one because it is backed with this reverse FEG right here. I might actually just put my sell or short order right there. And we have a bunch more FEGs. I don't need to get in that position because we already had a nice trade today. So what I'm going to do is this. I am going to just place an order like that. And again, target the low hanging fruit. This would be 5R. So I'm going to do half risk. I don't want to give away my profits. I'm going to see what happens. This doesn't have too big of a chance of winning, but we'll see. This actually looks really good. Some really strong pushes down, and we get filled again. And this trade actually brings the account to, wow, 12%. I don't think we lost a single trade. That's absolutely insane. All right, so that is actually already going to conclude our session because we did reach our goal. We managed to get over 10%. Let's actually look at the statistics. As for our statistics, the win rate is 100%. And let me quickly clarify, this strategy does not have a 100% win rate. You will lose trades, of course. It's going to have a really high win rate, especially if you collect data on it and stack some additional confluences on it. Again, I am really emphasizing this. This is no 100% win rate strategy. As you can see, we started with a balance of 1 million and we managed to grow that to 120K, which sounds absolutely ridiculously unbelievable, but I'm just as shocked as you are. We started on August the 14th and we ended on August the 16th. So that's basically, yeah, solid 3 days of trading. So on 3 days of trading, by risking 1%, you could have potentially made 12% with this specific strategy. Let's go look at some additional statistics here. We have an average RR of 3.77, a max RR, which was that insane trade of 5.9. So that's pretty good. The average trade duration is going to be just 24 minutes, which is not too long. And we basically had 4 winning trades in a row. And that is going to conclude it. Now, if you're interested in this strategy and want to see some more details about it, I highly encourage you to join the Discord server where a lot of members are actually trading this strategy actively. If you want to unlock some more confluences and just sharpen your edge in data on this specific model, I do have an elite program where we definitely talk about this model and just ICT concepts in general. There are more models in there. Feel free to check that out. The Discord server, by the way, is absolutely free, so I hope to see you there. I would also appreciate that if you found some value, that you leave a comment, perhaps a like. And if you want to see more videos like this in the future, you could always consider subscribing. Thank you so much for watching, and I will catch you in the next one. Bye-bye.